Before we get into it, if you enjoyed these videos, please hit the like and subscribe button, and keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as, investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that.
All right, folks, here we are on Saturday, March 22nd. We're going to take a look at HIMS today. So we were tracking HIMS and it had this huge run up, great Super Bowl ad. And since then, things have fallen apart. But things have fallen apart for a lot of stocks. So I wanted to come see if HIMS is maybe getting into a good buying opportunity, what that looks like. Now it is trapped or wrestling with this 34.54 that we had on the chart. And these are the retracement levels from this move here that you can see. And so it's looks like if we just take a very standard approach to looking at it, support flipped to resistance. Now, will that prove out to be the case? I don't know. I tend to look at these more nuanced or give a little bit more wiggle room into gray areas where, to me, this isn't just clear support, clear resistance. This is what I call wrestling with it. It's a little bit above, it's a little bit below, but it is sort of plastered to the level. It's magnetized to the level, and it hasn't really indicated its true move away from that level yet. And that away could come up, that away could come down. But it may just consolidate along that level until, that move is determined. Now, if it does come down, we do have this 2407 level. I don't know if it would come down that far. We'll talk about that in a minute. And if it does start to recover, it does have this 4275 that it could try to stretch for in the coming days and weeks or whatever. Now, better than I think the 2407. What I'm looking for is I'm not in HIMS at the moment. At least I don't believe I am. Sometimes my longer term accounts, I put stuff in there and forget about it. But yeah, in any case, instead of 24, I would probably get pretty interested unless things just looked awful. Awful for HIMS, awful for catalysts, awful for the overall stock market, which that's very plausible, I think. But if that weren't to be the case, and it were to come down to this 183 EMA, this gray one here, I would feel pretty willing to take a chance at that point. But that's more what I'm waiting for. At this point, these short-term EMAs, even though it is wrestling with the 8, are still fully in a bearish formation. And the 21 relatively recently crossed over the 34, and it is for the time being seeming like it's just treating that 8 as resistance. And so it doesn't give me sort of boomy vibes at this point, or even like stair step vibes. So looking for it to come down and touch like the 183, like it has, a bunch of sort of relative near misses, leading up to this big push. But you see here where it overcame it, that's when it really took off, right? It had this dip down here and it tried to hold support for a while and then fell below. But as soon as it regained it and these bullish crossovers started to happen, it just took off. And it hasn't really retested it since. It hasn't like made contact with it yet. So I might be foolishly missing out on a dip buy opportunity by just being too risk averse, right? So if you're less risk averse, then you may think differently. But for me, I would feel better seeing it come down, touch that 183, see what it does. And if it looks like that might be a really good bounce area, sometimes I like, if it's coming down toward it and things don't look awful, like the whole market doesn't look like it's crumbling or whatever, I may start to accumulate as it approaches, just in case it doesn't come down all the way to the level, right? Because nothing is to the penny. So I may start to accumulate it as it approaches and then sort of put in the rest of my chips as it gets there, or if it does make contact. And then just make sure that I get out if things don't bounce or stabilize or whatever. But for me, that's what I'm looking for at the moment. Again, if it does lose that 183, there is that 24 level that we talked about over here that could come into play. But that's why I separate these two out, to give a couple of different looks and also to not have just 1,000 different things happening on the chart and it just looks very cluttered and messy. Thinkorswim wise, it's reached this full -1 ATR, so it's sort of fulfilled that. If it wants to kind of be done with it, still sitting in the channel. So we'll see where it wants to move, but nothing super compelling happening for me on here other than to say it did fulfill that -1 ATR, so maybe it doesn't want to dip more, but I mean, we've seen that, you see it here on the opposite end of the spectrum, reaching that +1 ATR, and it had a lot of juice left in the tank. So that doesn't necessarily mean anything. For me, it's nice to have these ranges when it's working through these ranges. Once it's outside of them, to the downside or to the upside, it's like, okay, all bets are off. I don't know where this is going. The levels are already blown through. So then we rely on the other chart, which is, to me, the better look for the time being. All right, folks, so I hope that you are enjoying your weekend. And as always, I appreciate you watching, and I will see you in the next video.